Number 6 is buy value, not price. And I should mention that everything that I talk about, not just in this video, but all of my videos, are things that I have learned myself. And most of them I learned the hard way. So I grew up in a traditional Indian household, and the traditional Indian household is, well, how do I say this? Cheap. And I grew up with this very cheap mentality where if I spend less money, I get to keep more money for myself. And I didn't understand the difference between value and price. And as I started to grow in my business, I needed an accountant. And so what did I do? I found a cheap accountant. Now, what does that mean? That means that this accountant was not charging me a lot of money every single month to do my bookkeeping and do my accounting, which means I get to keep more money in my pocket, which I thought was a good thing. But this ended up costing me a whole lot more money because the first thing that happened is I had so much stress because this accountant never did anything on time. It felt like he didn't really do anything. I felt like I had to be the person to say, hey, you want to file my taxes? Hey, you want my receipts? Hey, you want my bank account information, my credit card information so you can take care of my stuff? So it was always this like me trying to say, do you want to do some work for me because I'm paying you? And things just never really got done. But then it really got bad because I realized that I was paying penalties and fines pretty often, which in the beginning, I didn't think too much of it because I was saving a lot of money in my accounting fees. So what's the big deal if I'm paying a little bit of penalties here and there? But then it really started to get bad because I remember one year, it was a January, I'm in my office, my accountant calls me in the morning. I pick up the call, which by the way, if you get a call from your accountant in the morning in January, it's never a good sign. Pick up the call and my accountant says, hey, Jaspreet, we made a little mistake. Can you do me a favor and send $18,000 to the state of Michigan by the end of the day? And I said, oh, what? Excuse me? And he said, oh yeah, I also have to tell you that we also made a mistake on your federal tax returns. Can you also send an additional $100,000 to the federal IRS by the end of the day today? At which point, I really didn't have many words. And then he went on to say, I also have to tell you that you're going to have to pay some penalties and fees on this as well because we missed this. Which got me thinking. I was paying a little bit of money in accounting fees. But because I was paying a little bit of money in accounting fees, I was paying a lot more money in taxes than I had to. I was paying a lot more money in fees than I had to. I was paying a lot more money in penalties than I had to. And I was taking on a lot more stress than I had to. So then I decided to fire my accountant and go on the hunt for a good accountant. Then I found a good accountant who charges me a lot more. I mean, I'm paying many, many, many multiples of what I was paying before in accounting fees. But number one, I'm actually paying less money in taxes legally. Number two is I save a lot of headache and a lot of stress. And number three, things get done on time. And not just that, I have somebody who actually cares about tax strategy instead of just me having to push them to do their own work. It's the difference between value and price. And many times we get fixated on this idea of how much money is this thing going to cost me? And we completely ignore what the value is that we're going to get. And there's many different ways to look at value. I mean, one way is the financial value. This can be with who you hire, who you work with, type of services you get. But it's also in your life value. We've all stayed at hotels before. And there's a very big difference between when you spend $50 to stay at the Red Roof Inn and then upgrading to the $150 Holiday Inn. It's a difference in value. There's a difference in value when you go from the $150 Holiday Inn to the $250 Embassy Suites. It's a nicer bed, different experience. There's also a difference in value when you go from the $250 Embassy Suites to the $400 Hilton or Marriott. It's a difference in value, a difference in experience. And there's also a difference in value and experience when you go from the $400 Hilton and Marriott to the $1,000 a night boutique hotel that knows who you are before you even walk into the door, where somebody's going to open the car door for you, pick up your luggage for you, and take it into your room before you even finish checking in. It's a different experience. See, it's different value. And this is where you gotta stop demonizing price and understand value. And understand in the beginning, you might not be able to pay the super high prices, but you gotta start understanding how value versus price works. That way you can start getting the higher value, because sometimes one of the most expensive things that you can do is to be cheap. Wealth law number 7 is never spend more than 3/4 out of every dollar that you earn. If you follow just this one step, you are gonna live a very different financial life in 10 years, but it's difficult because it's gonna require you to make some sacrifices. Because when most people make $1,000, they think that they can spend $1,000. But if you do that, you are never, ever, ever gonna become wealthy. Remember, how do you become wealthy? The way you become wealthy is by taking money that you earn, not spending it all, taking the money that you don't spend and using this money to buy investments. Focusing on the trends, not the emotions, but investments that are there to give you the cash flow. Cash is king, but cash flow is the queen. So now let's talk about this. If you really want to become wealthy, that means you cannot spend more than 3/4 of every dollar that you earn. And one of the things that I like to talk about is a 75-15-10 plan, which says for every dollar that you earn, 75 cents is the maximum that you can spend, 15 cents is the minimum that you're investing, and 10 cents is the minimum that you're saving. What that means now is every time you make a dollar, you got to have it flow through this funnel. And if you do this, you're always going to be paying yourself first. And by paying yourself first, I don't mean you're going out and paying your BMW, paying for the Gucci because you're paying somebody else when you buy those things. I mean paying yourself because this is the money you're going to use to invest into more assets, into more investments that are going to pay you with more cash flow. The reason why this is difficult is because now when you make that money, you can only spend 3/4 of it, which means you might have to live a little bit smaller, which means you might not be able to drive the BMW right now, which means you might not be able to have the nice big apartment right now, which means you might have to downsize on some things. But if you stick with this, what's going to happen is this money is going to start making you some more money. Now, it's not going to happen tomorrow. It's not going to happen this year. It's probably not going to happen next year either. But if you stick with this, you're going to start to see more and more income coming from these investments over the years, and especially over the next decade. That's why I call it a decade of sacrifice, because you got to spend less and earn more, so you're working to invest like crazy over the next decade. And that's hard. Most people don't like to talk about it in a decade. That's why everybody's selling you 6 steps to 6 figures in 6 months, because everybody likes the idea of getting rich quick. But the reality is getting rich quick really just makes somebody else rich. So now when it comes to your savings, you got to understand you don't want to just save your money forever. You want to save your money strategically, save your money for an emergency, save your money for a big purchase, save your money for an investment. But once you hit your savings goal, whether it's 3 months or a year's worth of savings, take this money and put it here. That way it becomes a 75-25 plan. That way for every dollar that you earn, 25 cents is going to make yourself rich, 75 cents is making somebody else rich. If you can follow this system of living off of 3/4 of every dollar that you earn, you're going to become wealthy. Period. Just look at the numbers. Go run any investment calculator online and you'll see that if you stick with this for long enough, you're going to be able to have enough wealth in your retirement portfolio to live your life free financially. Wealth law number 8 is that time trumps all. If you can invest $500 a month into these investments, into these assets, and you can get a 10% return on your money, which has been the historical stock market average, and you do this for 25 years, that means your $500 a month is going to grow to $750,000, which is a lot of money. But let's talk about time here. Because if you can add just 5 more years into this investment, where now you're doing $500 a month, not for 25 years, but you do it for 30 years, just 5 more years. Well, now you are going to have, you want to guess? $1.25 million in your investment account. You're going to have more than $500,000 more in your account if you just keep investing your money for an additional 5 years. And the reason why is because time is one of the most valuable tools when it comes to building your wealth. We all know Warren Buffett, one of the wealthiest people, one of the wealthiest and most successful investors in the world. Well, 99% of his wealth came after his 50th birthday. And he's been investing his money since he was 16. What that means is that time is one of the most powerful tools when it comes to building your wealth, because, well, every year you invest more money. And the more money you invest, the more money can grow, the more money that you can earn off of your money. And if you can keep compounding your money, well, that's going to allow you to keep growing your wealth. And now you might be saying, well, Jaspreet, eventually I want to use my money. Sure, no one's saying that you can't start living a nicer lifestyle as you make more money. But remember, if you just start spending every dollar that you earn, well, then you're not going to be able to grow your wealth. But if you spend a piece of every dollar that you earn, well, now you can keep growing your wealth while also living a bigger lifestyle. This allows you to build your wealth faster than you make other people's wealth. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.